Howdy, everybody. Welcome to Liberty Call. Today is Tuesday. Tuesday, May 13th, 2025. I hope you're having a fantastical day out there in the interwebs. All right. Well, looks like Wall Street has roared back to life as the U.S. and China deals are agreed to a 90-day tariff truce. Well, we'll see how that goes. Slashing trade duties and sending markets into rally mode. The Dow surged over 1,100 points. Well, no, that was yesterday's. What am I doing? I'm reading the wrong thing. Anyways, markets are off to a good start. The Dow is not in a good place, but the S&P and the NASDAQ were off and running today. So I had my indexes a little mixed up. So anyways, I hope you're having a great day out there. Sorry, I'm a little red. I was just finished my workout a few minutes ago, so I'm a little sweaty. But it's a beautiful day here in Colorado. And before we jump into all the news of the day, so it's not that exciting, but we got some CPI news and some speculation on what's going to happen with the truce or the trade truce and how it's going to affect imports and exports and such. So, but before we get started, if you could give me some thumbs up, a like, share, subscribe, or follow, and press that notification bell. All righty. Let's get to the markets. Here we are. Dow Jones. Gosh, it's popping up on me. Dow Jones, like I said, weirdly was down 0.64%, 269 points, closed at 42,140. The S&P, on the other hand, was up 0.72%, 42 points, closed at 58,86. And even more strangely, the NASDAQ up 1.61%, 301 points, closed at 19,010. So again, it's kind of back in the mode where we were like a month or two back, where the Dow is, in the red, the S&P's in the middle, and then the NASDAQ is on the top. And then, if it holds true to form, we'll have a day where the Dow will be in the, massively in the green, the S&P will be in the middle, and then the NASDAQ will be massively in the red. So it's just, markets are weird right now, folks. The VIX today was down 0.98%. It's at 1822 currently. Canada up 0.33, Brazil up 1.74, and Mexico up 1.04. Headed to Europe, Germany up 0.23, the UK down 0.02, France up 0.3, Netherlands up 0.58, Spain up 0.83%, Italy up 0.39, Switzerland down 0.58, and Portugal up 1.11%. Russian exchanges green today. The MOEX up 0.09, RTSI up 0.51. And the overnight markets, the Nikkei in Japan was up 1.43%, Australia up 0.43%, New Zealand up 0.12. In China, the Shanghai was up 0.17, Shenzhen Component down 0.13, China A50 up 0.31, DJ Shanghai up 0.09, Hang Seng down 1.87, and the Taiwan weighted up 1.03%. All right, so those are all the markets. Those are the markets. All right, well, let's jump to the market recap. S&P 500 climbs as cooling inflation keeps trade-driven optimism intact. All right, the S&P 500 rallied again on Tuesday following cooler than expected April inflation report, boosting investor confidence just days after the U.S. and China reached a key trade truce. The consumer price index, the CPI, showed headline inflation rose 2.3% year over year, below both expectations and March's 2.4% pace. It marked the slowest annual rate since February of 21. Monthly CPI rose 0.2%, below the anticipated 0.3%, while core inflation, excluding food and energy, also increased just 0.2% on the month and 2.8% annually. These numbers help calm fears that new tariffs would immediately reignite inflation. Morgan Stanley noted no signs of price pressures from tariffs yet. If I could pause here, here's the reason why I personally wouldn't believe that tariffs would cause an inflation spike, because it's a zero-sum game in this case, meaning that if you have $100 to spend and you say you were buying something from China that normally was, I don't know, $100, and now there's a 134% tariff on it, well, now you can't afford it. Even if it was $50, you could have gotten two. Now you could only buy one, or well, maybe even buy one with the tariff on there. So in that case, people are probably going to spend their money elsewhere, as opposed to either they'll buy less of the Chinese goods for the same price, or they will go and find something domestically or from another country. And so again, I don't really see that pushing prices up or causing inflation to spike. Where was I? Following last week's U.S.-China deal, Washington agreed to lower its highest tariffs on Chinese imports from 145 down to 30, while Beijing reduced its retaliatory tariffs from 125 down to 10. Both countries also paused further tariff escalations for 90 days. Goldman Sachs responded, by cutting its U.S. recession risk projection down to 35, down from 45%. On the corporate front, Boeing gained after Bloomberg cited China lifted a ban on deliveries of its planes, signaling further trade thawing. NVIDIA surged over 6% after securing a deal to sell 18,000 AI chips to Saudi firm Humain for use in a new 500 megawatt data center. Meanwhile, United Health slumped as it suspended full-year guidance due to unexpectedly high medical costs. CEO Andrew Whitty announced his departure. Under Armour rose after beating revenue estimates despite posting a quarterly loss. Coinbase jumped as the crypto exchange is set to replace Discover Financial Services in the S&P 500 before May 19th. Overall, easing inflation, tariff relief, and strong corporate developments pushed equities higher, with risk sentiment improving notably across the board. And you can see my main man Jake back here. He's stretching. He's had a rough day. Too much playing with the puppy. All right. Next up, we got some data here. April CPI report from First Trust. Mr. Nate Gursey put this together. All right. Inflation came in cooler than expected in April, despite elevated tariffs, offering some relief to consumers and policymakers. The consumer price index rose 0.2% for the month versus a forecasted 0.3%, marking a third consecutive month below expectations. On a year-over-year basis, headline inflation dropped to 2.3%, the lowest reading since the post-COVID inflation surge began in early 2021. This is a sharp decline from January's 3% rate. Energy prices ticked up 0.7% in April, driven by increases in natural gas and electricity, which offset lower gasoline prices. Food prices fell 0.1%, with grocery prices seeing their steepest monthly drop since 2020. Egg prices posted their largest decline since 1984. Core inflation, which excludes food and energy, also rose just 0.2%, undercutting the 0.3% expectation and holding steady at 2.8% year over year. Housing costs, particularly rent, remain the main contributor to core inflation, rising 0.4% in April. However, other categories showed signs of resistance to tariff pressures. Apparel prices fell 0.2%, used cars dropped 0.5%, and new car prices were unchanged. This suggests companies are not yet passing higher input costs from tariffs onto consumers. The Supercore Index, which excludes food, energy, goods, and rent, finally showed signs of softening. After stagnating during the Fed's tightening cycle, Supercore prices rose at just 0.7% annualized rate over the past 3 months, with a year-over-year rate falling from 4% in January to 2.7% in April. Notable declines came from airline fares, down 2.8%, and hotel prices, down 0.2%. Elsewhere, productivity fell 0.8% in Q1 of this year, with output down and hours worked up. Jobless claims fell to 228,000, suggesting continued, though slowing job growth. Given cooling inflation and weak money supply growth, some economists argue it may be time for the Fed to consider easing rates in the months ahead. I do not agree. We should keep rates as high as possible to A, strengthen the dollar, B, reduce inflation, C, stop the devaluing of our currency. I'd like to see, the money supply actually shrink. That would be nice. Make my dollars more powerful in the marketplace. So, I know it hurts our exports because a stronger dollar makes our exports less enticing to the rest of the world. But, what are you going to do? You're going to devalue your own currency just so you can export goods at a better deal? It doesn't make a lot of sense. All right, last up from Zero Hedge, trade truce set to ignite red hot front running of Chinese exports to U.S. Goldman. So basically, what I surmise from my scan over this and what it's going to probably say is we're going to have a lot more of what we just went through in the first quarter, where during this 90-day pause, we're going to see a lot of imports from China to try and get in under the door, kind of like when Indiana Jones slid under the door and had to reach back for his hat, kind of that situation. They want to get in ahead of like they did last quarter before the tariffs went into effect. Same situation. They're probably going to try and ramp up imports into the U.S. to try and again, front load the situation. So, all right, let's jump in. The newly announced 90-day trade truce between the U.S. and China is already sending ripples through the global trade, global trade, with analysts forecasting a sharp spike in imports to American ports. Under the agreement, which begins Wednesday, President Trump's tariffs on Chinese goods will be cut from 145 to 30%. While China reduces its retaliatory tariffs from 125 down to 10. The pause negotiated over the weekend in Switzerland by U.S. Treasury Secretary Scott Bessent offers a temporary reprieve in the ongoing trade war. Goldman Sachs analyst Philip Sun predicts a surge in import activity over the next 3 months, describing the coming rush as a front-running boom with lower costs on the table and uncertainty about what comes after the 90-day window. Major retailers like Walmart are expected to stock up aggressively, not just for the 2025 holiday season, but possibly even for next year in 2026. Supporting this view, Jefferies analysts report that freight rates on the U.S. or China-U.S. shipping route have jumped from $2,000 to $2,500 per 40-foot container in recent weeks. They note that a tight capacity and early signs of a peak shipping season are giving ocean carriers the leverage to raise rates even further. Freight forwarders and shipping companies are welcoming the news. CMA, CGM, and Maersk both cited the tariff rollback as a, quote, positive development, end quote, that's providing short-term clarity. Maersk confirmed it's working closely with customers to maximize use of the reduced tariff window. Nomura's chief China economist Lu Ting added that many exporters held off shipments in April, anticipating the policy shift. As a result, a backlog of goods is now headed for U.S. ports, debunking empty shelves fears stoked by mainstream media. With reduced tariffs and pent-up supply, U.S. import volumes are set to soar in the coming weeks. So again, don't be surprised if this has a negative correlation or a negative effect on the GDP for quarter two, simply because the more imports we have, the more it pushes down on our production here domestically. And so we'll probably, with the negative number that we had for Q1, probably, again, due to this, we'll probably have a negative number in Q2, which again is the definition of a recession when you have two consecutive quarters of negative GDP. So again, we shall see what happens. All right. Well, that's everything that I had to cover for today. If anyone needs me or needs anything from me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a ring. I'd be happy to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.